Hey, it's your favorite local realtor, Eren Millam, and today we're going to be reviewing another potentially doomsday video. We'll have to check it out and see. Um, this one comes from Bigger Pockets. It's a well-known investment website and YouTube channel. So let's take a look.
All right, let's get into today's video. We're going to talk about where all the houses are. Why is there no inventory in the housing market? And this is weird. Like, why is this happening? This is not normal. This is not what usually happens. Usually, when demand leaves, supply starts to go up. There are fewer homes to buy. So even if you are inclined to sell and you can afford it, you may not even find a home that you like to buy. So they hold on to it longer, which creates less inventory. And it's sort of this vicious cycle of less inventory on the market.
All right off the bat, I'm loving it. So this is kind of what I've been going over with you guys in all my market updates is everything with these prices, everything that it's based on is inventory. And because our inventory is so low, it's going to hold up our prices. You may see it falling in other cities, but in Lewis County, our inventory is still low. It's like 2019 levels. So, all right, let's look at some more.
Buyers are dropping out of the housing market in droves. And this kind of makes sense, right? Because affordability has hit the lowest point in decades, mortgage purchase applications are down, and the total number of housing sales have fallen off a cliff. And normally when demand declines like this, supply starts to shoot up. But that actually hasn't happened. Inventory, which is how we measure supply in the housing market, is up from pandemic levels, so it's come up a little bit, but it's still far below pre-pandemic levels. And this lack of inventory has prevented housing prices from going down as much as some people think they should be or will be going down.
So this guy should totally be my spokesman, and that's exactly what I'm saying. And the other thing he is mentioning is about all the record low transactions. That is happening. I think that's why some people feel like the market is crashing. So in January, we had like 58 homes closed, and in February, again, it was a low number, like 64. So that's not wrong, and that's probably why people feel like the market is doing what it's doing, but that price is holding steady, and that's where people are expecting the market to crash, and it's not going to happen in Lewis County, and we're already seeing pendings go up in the county for March. So I expect the closing number to go up, I expect inventory to go up, and I expect prices to go up.
And this all comes down to supply and demand, right? If demand falls off, as it has, but supply stays low, prices can decline, but in a moderate fashion, which is exactly what we're seeing. So far, we've seen prices come down about 2 or 3%, which is sort of a modest decline from June of 2022 until now, but that's nothing like a crash that a lot of people think are going to happen. But obviously, that's just so far. What happens from here is the big question, and what happens with inventory is going to be a huge factor in answering that question.
So again, inventory. He was mentioning the levels of inventory, will they go up above pre-pandemic levels? Like I said, right now, everything regarding inventory is kind of sitting around 2019 levels. We are so far behind. I think I saw an article that said Seattle is like 10 years behind where it needs to be in order to fulfill demand for these homes. So that's the issue is even though interest rates over the winter took out about 66% of buyers. Even though that happened, we still have fewer homes on the market than the amount of demand that there is. And that's what's keeping these prices up. Now, some of these buyers are already starting to return to the market because they were just hibernating for the winter. But now they're coming back. Prices are going to go up again.
So let's just take a step back and talk about what is happening in the first place. So first things first, as interest rates rise, the expectation of many, particularly those who are calling for a dramatic home crash, is that inventory would go up. This is sort of the premise of the home crash theory, right? There has to be a lot of inventory, too many houses sitting on the market. There's more supply than demand, right? The logic is this: there are X number of homes on the market, higher rates remove a lot of buyers from the market, and that leaves more homes. Even if there's the same amount of homes being put up for the market, if buyers aren't there, more homes sit on the market. That means more inventory. And this is normally what happens when demand leaves a marketplace, not the housing market, but just like a normal marketplace.
So that's, I think, what the federal government is trying to do is raise those interest rates, drop the buyer demand, and then that will help inventory get up. But in reality, what it's doing is it's pulling sellers back too. So our inventory has been decreasing since June of last year. It's kind of starting to trickle up. I do expect it to go up this year as people start to realize that, hey, the market isn't really crashing. But if those interest rates go up again, which they probably will, I think he said as much, it could stunt and stagnate the market as we're currently seeing it. But if things stay steady, you can expect the market to go up. Inventory, buyers, prices coming back up for the spring market.
Check this out. This chart shows seasonally adjusted inventory. And again, inventory is just how many homes are for sale at any given time, usually monthly. I'm going to be talking about it monthly on the housing market. You can see here that inventory is up from pandemic lows, which is great because inventory has been way, way, way too long. It's a lot of what fueled the insane price appreciation over the last few years, but it's remained pretty flat over the last few months and actually went down from December to January, which is the last data, the last month we have reliable data for. So you can see it's really flattened up. It's not spiking like some people are thinking that it will. That is why we're talking about this in the first place, because inventory is sort of starting to flatten out, at least for now. And I want to just make a note that this chart is on a national basis, but every market is really different. Let me just show you two. I think this is really interesting. So if you first look at Boston here, I'm going to show you this chart. You can see that inventory is still insanely, insanely low. It hasn't recovered nearly at all from pandemic lows, and it is far, far below where it was pre-pandemic levels. So you can see that inventory here hasn't recovered at all. But if you look at Austin, which is one of the boom towns during the pandemic, you can see that it has absolutely skyrocketed. It is way, way, way above where it was pre-pandemic. Even further above where it was during the pandemic. And so you can see that when I'm talking about averages, there are very different markets. And so when I talk about the national average, take this all with a grain of salt. What I'm trying to do here is help you understand how inventory impacts the housing market. Every market is super different, but on a national scale, demand is leaving the market and supply isn't growing. That's the weird question.
Okay, this is a really important point. You can probably expect in Boston, prices are still holding steady, going up high. You can expect in Austin, they're probably crashing. I think I have seen videos saying as much. So that's why you're getting all these different headlines. People in Texas are probably saying it's a doomsday. Nationally, I just saw a video that said on one report said that the prices are down year over year. And so this guy is then now saying the market's crashing. Everyone's finally realizing it. And, I was right, follow me, check out my other videos, blah, blah, blah. But what they fail to take into account is it's different everywhere. And at least in Lewis County, we are up year over year. The market went up $10,000 last month. That is February, okay? So while markets are different everywhere, in general, the national average is the price is kind of stagnated, okay? So in Lewis County, it's stagnant and then goes up, stagnant and then goes up. That's kind of what it's been doing these last 6 months. So definitely important to speak to someone local who knows what they're talking about and someone who's showing you stats and can give you context, not just, hey, I saw one report and so the market's falling apart and buy my new product.
So let's talk about it. Why isn't inventory growing? The short TLDR answer is because new listings are down. I just need to explain what's going on here. Inventory, what I've been talking about so far, measures how many homes are on the market in a given month. And it's this great metric because it shows the balance of supply and demand. It doesn't just show how many new homes are listed, it shows how quickly they're coming off the market as well. That's why inventory is so useful. And as we discussed, demand is down, which is one important element of inventory, but the other is how many new homes are being listed. And in the housing market, we call that new listings. And if you see on a national level, new listings are down a lot. People are just they're not putting their homes up for sale on the market. Or if you want to put this another way, as demand has left the market, so has new supply. And this is weird. Like, why is this happening? This is not normal. This is not what usually happens. Usually when demand leaves, supply starts to go up.
So we're going to get into his reasons really quick, but this is why the best laid plans don't always work out. So that's what they were hoping, is that raise the interest rates, go back on demand, and inventory will go up. And the opposite is true because they failed to consider that sellers, people who want to sell their home, have to buy a home. And if they're going to have to pay an extraordinary amount in interest, they're not going to put their home for sale. So not really well thought out, if you ask me.
The first reason this is happening is affordability. And if you watch my videos or listen to my podcast, you know that affordability is my big thing right now. That is driving the housing market, and affordability is driving new listings right now. The reason the housing market works differently from other markets is because, unlike a stock, when you just sell a stock and you take cash, you can do whatever you want with it. When you sell a home, you are typically looking to buy another home, right? A seller is typically a buyer. And so if the seller cannot afford to buy the new home that they want to move into, they probably won't list their property. This is often called the lock-in effect. Basically, people, are locked in at lower mortgage rates, and so they don't want to sell and increase their cost of living by having a higher mortgage rate. But it's about more than that, right? It's not just about the recent change in mortgage rates. That has a big impact on affordability, but there's also more to it than that. Think about people who have bought a home over the last decade. Maybe you bought in 2014, 2015. The value of your property has gone up a lot. You have a lot of equity, you have a lot of value in that property. Then during the pandemic, you probably refinanced your home that you bought for well below current market rates down to a 2 or 3 or 4% interest rate. And so your cost of housing, the cost you pay on your mortgage right now for anyone who's bought since the Great Recession, is extremely low. Now, if they want to sell and go move somewhere else, they're paying really high prices, all-time highs on home prices and higher mortgage rates than there have been in the last 15 years, the cost of moving to them is extremely, extremely high. So the only people who are listing their properties for sale right now are either people who have to, life happens. There are reasons that people have to sell their property. So those people are still selling, or people who are in great financial positions who just have a lot of money and don't really mind paying more for their housing prices. But for everyone else, they are probably opting out of moving right now because they don't want to increase their cost of living so much. That's probably the main reason in my mind why new listings are down. But there's actually a second really interesting reason why new listings are down based on a new report from Redfin that I've been looking at that shows that the amount of people spend in their homes has nearly doubled since 2005. Check out this chart. You can see that back in 2005, people moved and basically sold their home every 6.5 years. Then it peaked in about 2020, which kind of makes sense because of the pandemic, at 13.4 years. That's more than double. It's come down a little bit to about 12.3%, and we'll see if this trend continues. But I would be surprised if it went much further down than it is right now. And this is really wild, right? And it makes sense, right? This is a great reason why people aren't listing their homes. They're staying longer. That means the average number of times a home hits the market in its useful life is declining. And so there's just going to be less inventory. And this to me is really interesting because this could point at sort of a permanent lowering of inventory if this trend continues. Because this is such a big thing that could be impacting the market for years to come, I just wanted to quickly explain what Redfin says are the reasons why people are staying longer. Number one, older Americans are aging in place. Nearly 90% of Americans want to stay in their home as they get older. So there's this theory that people are hoarding the homes. That's kind of true because 90% of Americans want to stay in place as they get older. That's happening at a time when our population is also growing older. Our demographics in the US are skewing older and older. 17% of US is over 65, up from 13% in 2010. And there's just this sort of lack of affordability as well. As I talked about, there's another reason that people are staying in their homes longer is because they have such good deals comparatively to what they could get. Now, the fourth reason is that rents are super high, so some owners are renting their places rather than selling, and so they transact on those homes less. And the last reason is also because of low inventory. It's this cycle, right? There are fewer homes to buy, so even if you were inclined to sell and you can afford it, you may not even find a home that you like to buy, so they hold on to it longer, which creates less inventory, and it's sort of this vicious cycle of less inventory on the market.
So this guy is really good. He's trying to tell you everything I've been saying. Really like reviewing this video. He just takes a really long time to say it, so we'll have to speed it up in post-processing.
Overall, just to summarize what we've been talking about here, inventory, which is basically supply in the housing market, has leveled off, at least for now. And this is happening even though demand has fallen off dramatically, which is unusual. And this is happening because fewer people are listing their homes for sale. And from what we can tell, this is due to two reasons. The inaffordability of moving. People have better deals in their current homes and they don't want to move. And the average length of time people stay in their home is increasing. So fewer and fewer people are listing their homes for sale. Of course, we're going to have to wait to see what happens, but this is super important. And I encourage you all to take a keen look at this in your market because inventory is a great lead indicator for pricing. And lead indicator basically just means it helps predict future other metrics. So inventory is a very good lead indicator for which direction housing prices are going to move. If inventory starts to go up again, we should expect price declines, deeper price declines, or basically it puts downward pressure on prices. Higher inventory, downward pressure on prices. If inventory stays level or it declines, that puts either, that might stay flat or it might put upward pressure on prices. So those are things that you should be taking careful look at in your market. Because remember, my analysis, the high level stuff I've been talking about is on a national level. But if you want to understand your local market, I recommend you check out these two metrics and keep a close eye on them in the coming months. Inventory and new listings. Check them out.
All right, so he's been saying exactly what I've been saying and why we need to stop listening to all of the headlines that this market is falling, because in your specific area, or at least in my specific area, that's not the case. And everything he is saying here is true. It's the inventory. Typically when inventory goes up or demand goes up, when demand goes down, inventory typically goes up. And that's not what we're seeing. Is, demand was up here, inventory was here, and as they reduced demand, the inventory went down. So the prices are remaining steady and going up. I watched a video the other day that said, from 2007 to 2008, the market had dropped 1.1%, in the first 8 months, and then, totally fell off the map, 27%. And so he said, well, from June to February, the market's down 4.4%. And so that means the crash is going to be 4 times as bad as the last one. That's literally what people are saying. If the crash is 4 times as bad as what it was last time, that's 108%. So People are going to have to pay people in order to take their homes. That's never going to happen. This is supply and demand, and unless we see a lot more homes coming on the market, these prices are going to keep going up because the demand is still there. Unless they push interest rates up, then it might go down a little bit more. But then again, inventory is going to go down with that as well because it's less affordable for sellers to buy. So there you have it. They're saying exactly what I've been saying. It's so nice to hear someone who's making some sense and not saying that the market's going to lose 108% of value. So I'm Eren Millam, and remember, never settle for less than extraordinary.